creates a flywheel, an innovation flywheel. Entrepreneurs start companies, develop them, get acquired, and then the larger company can bring to market that technology in a way that the startup never could. And then usually after a couple years, the entrepreneur can't stand it anymore, the bureaucracy, they peel out and do it again. We get this continuous cycle. Entrepreneur launches company, VCs invest, and then it gets acquired, and then it spits out and does it all over again. And that flywheel, it is America's comparative advantage.
Hello and welcome to Media Snack Winners, the fast-paced podcast interview show where we get to meet the individuals and organizations doing great work to inspire success and drive change through the global media and marketing industry. On Media Snack Winners, we get to learn what is behind that success, what it takes to make change in the industry, and what the rest of us can learn from those experiences. Because the best are short on time, I asked 10 questions in around 20 minutes, and my special guest for this episode is Terry Kawaja, the founder and CEO of LUMA Partners, the digital media M&A advisory business famous for the LUMAscape. So for those that don't know, tell us what you do, and you're a winner in this space. What does it take to win in digital media M&A?
Yes. Well, so I'm Terence Kawaja, founder and CEO of LUMA Partners. So we advise at the intersection of media, marketing, and technology. And there's a lot that goes on in that space. So think advertising technology, marketing technology, digital content. There's a lot of players at that Venn diagram intersection. And we're advising on mostly M&As. We've done some sort of strategic capital raise if it's late stage, but essentially we're in the middle helping, whether it's larger strategic companies and or private equity companies as they look at what investments in the technology realm that they believe can accelerate their position in market. And when I say technology, it's around media, it's around data, analytics, AI, pretty much the whole world of media and marketing has moved or is moving from an art to a science. And for that, you need technology. And whilst technology acquisitions were at one point solely the realm of larger technology companies, now you're seeing, publishers, platforms, agencies, everyone's getting in on the game because it turns out this technology is essential. Now, what it takes to win are a few things. Number one, I'm sure you've seen a LUMAscape, right? By now, these are ubiquitous industry charts that map all the companies across various sectors. And the first thing you notice from them is just blah, like the mass fragmentation, the number of companies in different categories, adding value or attempting to add value at different parts along the way. So we've got a massive ecosystem. It's growing, it's fragmented, it's complex, and it's dynamic. And so the only way that one can truly, we believe, provide strategic advice is to understand the industry, have a sense for parsing which trends are real, which trends are head fakes, because after all, in marketing loves the shiny new object, and there's all kinds of quote unquote trends that come up, and we call balls and strikes, so that you can advise companies on either making investments or making acquisitions to position themselves better for the where the ecosystem is.
Listen, thank you for that quick rundown. It's clear that's what it takes to win in the space, and you're a winner in the space. You've done a lot over the years through LUMA Partners, and so is there anything particular that you're most proud of that you could share with us?
Sure. I would actually sort of barbell it and say on one hand, we have we've taken this sort of deep knowledge approach. We're publishers. We have opinions on sort of where things are. And we strive for something we call objective credibility. And we believe that all of that work, which not every investment bank does, right? There's lots of investment banks that just show up and and they'll say, we can manage your process. We can write up a book, call 100 people, and manage an auction process. Well, any higher mammal with decent training can do that. We believe those are more of the commodity services that M&A advisors provide. We, on the other hand, have had deep relationships with the buyers. We understand their strategic objectives, and that's a nuance that we think adds a lot of value. So at the end of the day, what am I most proud of is in completed deals, we are still averaging over 10 times revenue as a valuation on our exits. And that's across, 26 or 27 billion in exits. And that is just to frame it, multiples of where the market averages. So we have consistently garnered above market outcomes for our clients. I'm very proud of that. Of course, this is the part where you interject that past experience is no guarantee of future results, and yours may vary. And I guess on the flip side of it is, and going back to this notion of sort of objective credibility, I'm particularly proud of deals that we didn't do where we advise our client not to proceed in deals, because there's wins on both the deals that you did and the deals that you decided not to do. And we have a great track record. It's not published, but the clients know it, of when we advise companies not to do something.
Yeah, very good. Well, I like that. That's very much. So let's unpack a little bit of that domain, because Media Snack, as you know, we talk to a lot of brand leaders for me around media. We talk to a lot of agency leaders and sometimes publishing and platform leaders. You're kind of in it. Your business is knowing everybody's business, but you're also in our world, you feel like a category of one. I don't know who else does what you do, but you seem to be the head of that as a domain. But so it means you have a really unique and valuable perspective on what's going on. So from your vantage point, what do you see the biggest challenges are in media currently?
Well, I mean, there's a lot of challenges, I would say, and I think they're all a sub elements of this broader trend of media moving from an art to a science. Technology. There's always been new technology, and so for brands to and their agency partners to sort of understand which technologies do what and which ones can be leveraged to optimize the client's outcome, whether that be top of funnel sort of long-term brand awareness and brand proposition, or more of a sort of direct response where you're sort of actually measuring the outcomes and you have a tight connection between sort of your spend and then the results that you're looking for. It can be, like I said, it's a very dynamic world. There's regulation is changing, technology policy is changing, technology is changing, AI being the latest and perhaps one of the more substantive changes that have taken place. And it's really hard for companies to get their head around those. And as I mentioned earlier, parsing which of these trends are real or not, and how they, in particular, given their domain, whether they be in autos or finance or hospitality or whatever category they're in, figuring out which of those sort of technologies and best practices they can best utilize to optimize their spend. And I think it's always evolving. It's always iterating. And so, for brands and agencies, they have to be on top of these changes, maybe not at the coding line level, but they have to, from a strategy level, understand which levers make sense to pursue.
Yeah, very good. So in your domain specifically, in the M&A and advisory space that you've got there, what's going on? What is the current state of M&A in digital media?
So M&A is at in the sort of, I'm hoping the third and final year of a 3-year trough, a pretty substantial trough in activity. It really, we saw valuations, drop substantially in 22. That caused companies to focus internally in 23, which was not a bad thing. in the sense that, a lot of companies were bloated, and not perhaps optimizing the application of technology to enhance their operating leverage. So companies really went into this sort of internal focus in 23 and 24, where they didn't do a lot of investing and acquisitions. And then, of course, with the election of Trump in late 24 and the imposition of tariffs in 25, here's the funny thing. We were just starting we had all kinds of macro variables. We had a peaking inflation and, concerns about a recession. And as those started to fade towards the end of 24, dialogue picked up for the first time in years. And we started to see transactions. It was $20 billion worth of transactions in our sector between the fourth quarter of 24 and the first quarter of 25. That was great. And then, of course, the tariffs hit on April 1 and basically put everything on pause. Why? Because not that tariffs have a direct impact on advertising and marketing spend, but of course, eventually, should they have a substantial impact and start reducing inventory on shelves, you're not going to advertise for goods you don't currently have. But it's broader, and perhaps a greater impact was on the impact on business confidence. People just didn't know where the world was going. And so we've been in this sort of 90-day pause since that happened. And that's a shame, because we had just come off of this, lull in activity. And I'll explain why I think that's really, really important. And so what we have found of late, here we are, towards the end of the summer, and dialogue is starting to pick up again, which is giving us hope that we are going to see a resurgence of this resumption of normalized M&A deal activity. And that is what we're finding when we talk to people is, they're sort of saying, look, we've now seen, how these tariffs have sort of manifested themselves in the market, the whole taco thing. It turns out we're going to have uncertainty for some period of time, perhaps until the end of this presidential term. But it's time to get past that. It's not going to be the end of the world. And we have bigger fish to fry with bigger issues to resolve. And let's just get on with whatever we were sort of pursuing before this sort of put a pause on things. And the industry elements, range everywhere from identity. We're now living in a world where cookies are going to persist. So that was a bit of a head fake. We've got, the walled gardens continuing to usurp market share in terms of, media. We've got, and we've got a bunch of things around how CTV is evolving and the shift from linear to digital television. We've got, the continued rise of commerce media. But the big daddy of all these disruptions is AI and its application to pretty much every facet of the advertising and marketing ecosystem, from the fundamental applications. If you think about it as a Maslow's hierarchy of needs, there are these sort of base aspects of, media planning, optimized media buying, analytics, measurement, all of those sort of meat and potatoes tools that the industry has to execute. AI is improving on those. Then the next layer up would be sort of creative, whether that's content or ad creative. And we're seeing an explosion of both improved efficiency and, where I think the impact is really big, effectiveness, big change in effectiveness in terms of AI's application. And then a layer above that, and perhaps existential for a lot of the publishers in the ecosystem, is that sort of traffic, how internet navigation works. Because historically, we've had search drive a lot of that. The blue links are not getting the same traffic as before with the AI answers. And so we're early days in trying to figure out the monetization of that traffic. We are quite confident that it isn't purely going to be subscription. 97% of all AI utilization is free. And so invariably, we believe it'll be an ad or an ad-like sort of interface, I don't think that'll look like a traditional add. It won't be interruptive. It'll be, sort of uh, 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 value added, or it'll help with the journey that the consumer is on to find their answers. And it may look more like an affiliate type of sort of intermediation, but we're confident that that will be a big part of it. And yet here we are in the early days trying to figure out exactly what it's going to look like. What are the LLMs going to be able to scrape, for free? How will they charge? What will the splits be? What will the formats be? There is a litany of unanswered questions around that layer. And then the final layer, to sort of quote Donald Rumsfeld, are the unknown unknowns. We don't know. This is super powerful technology, and invariably it's got applications that we're just unaware of today that are going to have a big impact.
The impact of AI through the industry is obviously going to be immense, and we're seeing now this year a lot more application. I think, and I saw you in Cannes, and we saw a lot more practical application now, which is good and exciting for the marketer. From your view of being an advisor, when you're advising companies, obviously trying to accelerate in this area, thinking that it's going to be a great value add and therefore potentially lucrative to build a business around an AI solution. Are there any kind of do's and don'ts that you're telling companies that you think are going to be valuable in the market in the next couple of years? Like what are the winning strategies for adopting AI that you're giving to companies?
So we sort of see three categories of companies. There are AI first companies that are relatively new, right, within the last couple of years, that have built an AI centric solution, truly AI centric. And by the way, you can tell it by looking at their revenue versus their employees. It manifests in operating leverage, and pretty much, a lot of people claim that they're doing AI. The reality is there are AI first companies. There is a narrative that these AI first companies are going to usurp all of the incumbent companies out there. We don't believe that's true because it ignores probably the most powerful force in business, and that's inertia. So companies that have, relationships and partners and inventory and revenue and customers, I mean, that certainly counts for something. But we counsel those companies that they have to, normally it's build versus buy, or do nothing. We believe the do nothing option is off the table in this world that we're living in, and we would edit the build versus buy to build fast or buy fast. You really can't let this run. Your competitors will pass you. These AI first companies will gain market share against you. So for the incumbents, you absolutely can win, but only by playing. You can't elect not to play the game. So that's on the sort of broadest application in terms of strategic advice.
You have a lot of people coming to you, I think, for that kind of guidance, because it feels like everybody's playing to win now. You've got to figure out how to beat competition, and technology is.
Yes, and so when I said three categories, there's the AI first. Then there's companies, existing companies that adopt AI or acquire AI, and they truly have a product in market. And then there's a third category, and that's the bullshitters, right? That's the people whose correspondence, their websites all say, we leverage AI, but there's really, at the end of the day, nothing there, or nothing more than just the machine learning that they've been doing for the last 10 years, in which case that's kind of not what the world is expecting.
I want to talk about M&A, because inevitably these things end up on YouTube and people search for them. And what you'll probably find is that there will be a portion of people that watching this who are people that want to get into your world, want to get into M&A around media and marketing. What advice can you give people that are actually thinking about stepping into that, because you're a leader in that and a winner in that space? How do you get into it? How do you succeed?
So we have seen there's probably two categories of sort of bankers or advisors in the M&A world. There are born and bred M&A advisors that were trained on Wall Street, usually at big firms, and have decades of experience, having seen lots of situations. That's the category to which I belong. And have then elected to specialize in this area and did the work to understand the trends, understand the strategies, get to know the people, etc. The other we see are often there be, an entrepreneur or someone in the industry, an executive in the industry that just says, you know what, I know a bunch of people. I could probably do this. Sort of sojourners or, journeymen in M&A. It almost never works. They like their claim to fame is, well, I know the industry. Yeah, well, good luck. We can go toe to toe on that. Um, and when I say it rarely works in the sense that there is just a tremendous amount of the experience that you bring to bear in negotiations. I'm not saying it's impossible. Some have done it. A few have succeeded though, because it's kind of like when you see people elect to get into headhunting to leverage their network or into coaching to leverage their network. That's all great because that relies more primarily on who you know, and that's super valuable. M&A is a very complex game, and I've been asked the question of what aspects of terms of skill sets does one apply to win in M&A, and I say, well, if you were to do a pie chart, the answer may surprise you. I'm going to split this pie in three pieces. 10% is going to be, advanced corporate finance, and 20% is going to be sort of economics or financial common sense. And a full 70% is psychology. And when I say psychology, it's the psychology of the buyer, psychology of the sponsor of the deal, psychology of the board, psychology of the seller, both the entrepreneur, CEO, founder, plus their board. There are so many. It's really a game of psychology. Yes, of course, you got to do valuations and all that. But the distinguishing factor is how you read a room, and you can justify a valuation that have vast differences between what the math would necessarily tell you. So that's where I think the experience of sort of having done hundreds and hundreds of deals, you can do some pattern recognition, understand when to follow a particular course, as opposed to just being someone who knows an industry and has a Rolodex.
So hopefully that's helpful to those of you looking to get into M&A in this field. I think you've got a fourth part of your pie though, Terry. Like you're going to have to divide that up a bit further, because there's definitely a segment for you that involves making entertaining videos online and sharing them and building your own personal profiles through that. So there's comedy. Comedy is likability has got to be a factor for success for you, I think.
So whenever I get asked the question about my comedy, I say, well, let me explain it this way. I've been a banker for 35 years, but I've been a comedian for 55. So I'm much more experienced at comedy than I am at banking.
Very good.
Number two, it's just me. And so in a world that rewards authenticity, that's just authentically me. So I sort of come across more naturally. But actually, the use of comedy, appropriate use of comedy, I should say, in business can be a very, very effective tool. When I speak, humans understand stories better than they do facts and figures. And humor can be a very powerful tool in garnering people's attention and their retention. People still comment to me about a presentation I made in 2010. No one remembers a presentation from last week, let alone 2010. But I get dozens of people that constantly come up and go, "Oh God, I remember that moment," because it was wrapped in a joke.
Very good.
So it's a very powerful business tool. And besides, from a standpoint of differentiation, how many funny investment bankers do you know?
It's a small group. Good. Okay, we're down to the last three questions. We're going to make these quick fire for you. Best leadership advice you've ever received or that you still give to people?
I would say Adam Smith got it right 355 years ago when he wrote The Wealth of Nations, a book in which he initially promulgated the notion of comparative advantage. So my best leadership advice is focus on your comparative advantage, not your advantage. So what you do well doesn't matter if everybody else does that thing well. What you do well relative to others, it was what will separate you from the pack. Focus on comparative advantage.
Very good. I love that. I was so curious to hear what you were going to say to that, because I'm sure you've got quite a lot of good leadership advice, given that that's probably your job. So love that one. Outside of work, so apart from comedy, when you're not busy with digital media, M&A, and entertaining the industry, what do you do, like, when it's just you, to kind of relax, to detox, to get away from it all? What do you do?
Well, the relax and detox, I swear, comedy, creating anything, writing, is just I love it to death, and it's my way of relaxing. Yes, I do gardening around my house. I like that, and I play sports. But like, pure joy is trying to figure out, what rhymes with GPUs.
Great. Okay. And finally, so, as you mentioned, you do a lot of kind of future gazing, and you've been pretty historically correct, I think. I've followed a lot of your stuff over the years, as you know, and, you've been good at predicting where we're going. So this is interesting. 12 months from now, or a year or two from now, you've talked about the how hard it is to predict. Uncertainty is the certainty at the moment. But where would you like us to be as an industry in a year from now? And what are your hopes for the year ahead for all of us?
So, where I'd like to be is, we talked about this 3-year trough in activity. And your audience may say, "Oh, boo-hoo for the investment bankers. Whatever, can't afford high enough bandwidth of Wi-Fi in the hand." No, which may be the case. Forget about us. The reality, I want to see a return to normalcy, not for, don't cry for investment bankers. It turns out that a normal level of M&A activity, that is to say, companies electing inorganic growth strategies to accelerate their innovation in the marketplace and their go-to-market, is the lifeblood of American technology and the prospects for our industry. It goes way beyond the benefits, the immediate benefits to, of course, founders get great exits, and that's wonderful. Their advisors are well paid. That's fine, tolerable, I guess. But the reality is, it creates a flywheel, an innovation flywheel. Companies or people, entrepreneurs start companies, develop them, get acquired, and then the larger company can bring to market that technology in a way that the startup never could, because of funding and just sheer network size and customers, etc. And then usually after a couple of years, the entrepreneur can't stand it anymore, the bureaucracy. They peel out and do it again. And we get this continuous cycle where, entrepreneur launches company, VCs invest, private equity if it's later stage, and then it gets acquired, and then it spits out and does it all over again. And that flywheel not only drives innovation, it is, I would argue, the key, and I'm going to do a callback to what I described on leadership. It is America's comparative advantage. You simply do not see this, I'm sorry to say, as anywhere near the same as Europe, and it's almost non-existent in Asia and other markets. So this is the part where I can start playing the national anthem and really get patriotic about. This is what America does well. It's why our tech sector is so much more advanced than every other country's. And I would hope that beyond the immediate beneficiaries, that the ecosystem will benefit substantially by having a return to normalcy. In terms of like the industry and those players, I know you spend a lot of time, talking about agencies, and I've consumed all of your stuff on that, which I think is brilliant. I too have, even though I have nothing, historically I had nothing to sell an agency, and I certainly have nothing to sell a marketer, which is why I think so many marketers reach out to me, because I'm unbiased. I don't have anything media to sell them, any data to sell them. They're not going to do any M&A, so I'm pretty objective and independent on that front. But I think it's just a fascinating time, given what we talked about in terms of AI. I'm fascinated by the changes in business models, in particular at the agencies. They essentially have to reinvent themselves. And I see a clear path of what they need to do. I've written about it. And I'm going to continue to talk about it. And at least now, I believe they've come into the realm of realizing that they actually need to be a player in the technology realm as well. And so far, it's gone well for the ones that have leaned in the most.
Very good. Well, listen, I mean, listen, your optimism is infectious, and I think that it's an industry that needs it at the moment, because there's a bit of pessimism creeping in, particularly around the agency landscape, as you say. But that obsession for innovation is why I'm in the US, Terry, as you know, and there's a lot of fun stuff going on, and listen, it's a great honor to speak with you and share that with our listeners and our viewers as well, because for those that you don't follow Terry, make sure you do, because he's a really good indicator of actually what's happening and a good predictor of where we're going to end up, and that is potentially gives you comparative advantage yourself. So
it all comes full circle, Tom.
Yeah, the more you know, the better you get. So listen, Terry Kawaja, founder, CEO of LUMA Partners, thank you so much for joining us on Media Snack Winners.
Thanks, Tom. Great to chat.
Thank you for joining us on this episode of Media Snack. If you enjoyed this episode, please leave a positive review and remember to like and subscribe on YouTube.
And we love hearing your comments, so please don't be shy in the comments section below.
That's it for now. See you next time on Media Snack.